Hey, welcome everyone. A lot of good questions about what happened with the Algo Optimizer based on today's action in the marketplace. The last video showed that the market was short. It had a defined trading parameter, scale out stop. It had a buy signal. Now, this is orange candle here, and that blue candle signifies that this is a high close doji, one of my proprietary buy setups. Now, a system, if it has to wait till the close, it can't get in on the close. It has to wait till the market closes and then get in the next period. Well, this had two criteria met on the short product or the short position on this product. It went short and it had a trailing stop function. Not only did the trailing stop function exceed by a gap higher opening, but the darn thing went long today. Now, this product has two functions to take profits. One function is it will trail stops. Another function is it has a max profit. By the way, the max profit was just hit at 44.53. So the system is now flat. It didn't reverse and go short. It's just flat. We have a new and crazy way of trading the market. The market has being long the VXX is short the S&Ps. So again, today, a beautiful setup, and that's what an algo optimizing system is all about. It kind of runs, and you trust as long as you can survive some of the drawdown periods that any system will undertake. This particular system, as I've shared many times, and I'll continue to share with you guys, had not quite a drawdown period, but a period of lackluster performance. That's a period of lackluster performance, a period of lackluster performance. But again, this thing is off the charts this year. Let's see how off the charts this year. Let's look at the performance here. All right, so a lot of systems traders would understand this, periodic returns. I think this is the best way to look at a system like this. For one, it's been going on since the beginning of January 2010 in backtest performance as well as in real-time performance. So looking at this on a year-to-date basis, and while yes, there has been a situation where we had a once in a, I think, or maybe it's twice in a lifetime volatility explosion, which happened in February, where the max profit liquidated the long position, and the thing kept going, right? I'll share that again with you in just a second. But looking overall in the last 12 months, I mean, the profit percent gain is just stellar in its cumulative amount of both profits and profit factor. Looking at year-to-date, or from 1/1 through today, net profit, this thing is just off the charts in its performance. So this is something that we look at not just from a trading perspective of short term. This is a 60-minute swing trade system. So obviously we see a lot more trades and holding period in downside movements than we do upside movements. What do I mean by that? Well, again, if this goes up, that means the stock market may be going down. So you get a lot faster reaction. And then the opposite is true. If you look at the way it's performed, when the stock market goes up, it takes a lot longer and the profits are less staggering sometimes. And in this environment, just to point out, the last example I was giving about its profit targets, this is the one that the max profit was reached, and that was the once in a lifetime insane upside. So, all right, a trader would have said, and if you were able to predict the future, you would have been able to hold that a lot longer or trail a stop. But this is a function of based on historic performance. Even this trade over here, which didn't, it hit a max profit target. So, do we optimize this and curve fit it for the current environment, or do you take signals based on historic performance? And I always like to say, you got to maintain a system for its current volatility environment, but considering this is a $40 instrument right now, or at times it's been a $20 or $10 before they do a reverse 4-for-1 split. They've done it 4 times, by the way. I think you maintain the system in the way it's structured right now. So it also is programmed to only trade X amount of dollars and to take so many positions within that. That's why you see at times different valuation, different position sizing. So there is a position sizing formula that is in the Person Algo Optimizer on the VXX. But as it is right now, an interesting situation. It is flat, and this equity market route, it may have found a little bit of stability down here, which is another interesting component, and I'll share that with you right now. We're at a higher degree time frame pivot resistance in the VXX, and it has nothing to do with the profit target. So that is pretty interesting. Let's take a look at that real quick. All right, I'm not saying that this is the end-all indicator, but that gold line right there is a longer-term pivot resistance line in the sand. So the VXX, and again, the pivots have done an amazing job, Person's pivots, in identifying market conditions. But when you get buy signals on the short term, and it just so happens it's a coincident effect that the volatility index has stopped dead in a dime and took the profit, which is nice. You know, it's nice that it did that. Will it reverse and go short? Well, we have two models for this. One is a short only, and one takes both signals. So we'll let you know when this thing actually reverses and goes short. But as it is right now, VXX, it's just flat, and you can see flat the total position. So that's the strategy with another new equity high. Again, it's just amazing. We've been sharing this with you for weeks on end, and looking at the signals, and it has a couple things that it does. Does it stay in the market all the time? No. It has a holding period that maxes out. It's got a profit target that maxes out. It's got a trailing stop that maxes out. And this is a professional system, and that's what goes into these designs. And that's what we've done with the Person Algo Optimizer. Let's take a couple seconds here and look at a couple opportunities that we were talking about this week and why we came up with them for this week's analysis. All right, without giving out all the secrets away, in our members login section, if you click on this members login and we log in, we'll type in my passwords, and we'll get into that right now. Once logged in, we're going to go up to planning and scanning, because that's our weekly thing. We put up a weekly video. This is done, usually it's done on Saturdays. Sometimes we put it out on Sundays. This week, our newsletter was posted on Saturday for, well, we wanted to get ahead of the St. Patrick's Day weekend. But here's the moral of the story. A lot of stuff that we were looking at, you'll notice we do a lot of research, and some of the research that we do has specific meanings. Some of you are familiar with a Hindenburg omen. It takes a look at 52-week highs and lows, and that's part of what we do. We also look at the McClellan oscillator as far as breadth, different ways of the market. We were talking about a potential, and we weren't sure if the daily McClellan oscillator was going to form a zero-line bullish. We may have formed, but we needed to see at least a 2-day period of higher high readings, which coming into the Monday clearly said not going to happen, right? COT data, looking at commitment of traders. But according to my analysis, what we would need to see a market to rally, we had a strong chance to see a retest of the highs only if, and I want to say, we saw a daily close greater than 276.91, and that would have represented a last conditional change breakout and a close above weekly pivot. And then now we have this Ides of March and this time frame of relative weakness, in like a lion, out like a lamb. By the way, looking at a couple things here I wanted to point out as well. Our idea this week was that from a seasonal perspective, and that's the arrow here pointing down, technology, the NASDAQ 100 versus the Russell IWM. Seasonally speaking, one goes down and one goes up. Technically speaking, we were looking at a little bit of relative weakness coming into the technology. This is an understatement. So again, it's kind of interesting how we use technical analysis to help us in the right technical analysis. And that's what I teach. The more efficient tools that are designed for this new kind of fast-paced environment of the new millennial type trading that we have going on, which is sector rotation on steroids. As far as new trades for this week, we were contemplating buying inverse leverage ETF on the NASDAQ 100, either the SQQQ or the QID. And this is what we put out this morning for the morning market briefing, but most of the traders that receive this report every weekend were getting well ahead of things, because this is what we see, a rotation, and that's exactly what I wanted to kind of drill with you guys. We saw a rotation that we should start to see into biopharma, transports, and possibly energy, as overweighted industrials, tech, specifically semis and software app stocks, were demonstrating bearish divergence patterns. And then we'll talk about this right here, PMC and volume indicators. So a couple things that I wanted to do was some option strategies here, and that's what we put out. Second was a debit put spread to talk about for our clients, and this is what we put out for the weekend. No new buy trade recommendations, and as far as stocks to sell, man, we had a list of stuff, but we were more apt to be wanting to be in those inverse ETFs rather than taking a stock specifically. So let's examine what this information gave us and where we got it from. So let's take a look quickly at the person's indicator package, and we're going to look at this using TradeStation, my TradeStation indicators. First is a specific proprietary volume indicator, and this is the person market catcher, which was added to Thinkorswim person's indicator package. So if you are a Thinkorswim client, you will have access to the person's market catcher, as well as the PPS, buy and sell indicators, and person's pivots. So let's look at the first and foremost SMH. What did we see there? Well, what we were looking at in the semis, not just on a daily basis, and I'm going to bring this into focus real quick, was that we were starting to see a divergence pattern in the semis. How did we determine a divergence pattern? The number 2 point from the number 1 point, we started to see relative weakness, and the volume action was making from the number 1 to the number 2 point lower lows. Now let's take this over and look at some independent or our next higher time frame, which would be the weekly time frame. So look at the weekly and then say, well, gee, this is more pronounced of a sell or market that's getting ready to roll over. The volume was clearly in a decline manner. The relative strength is obviously deteriorating, and that's the semi SMH. So that's why we were looking at that particular setup in the market, was because of the technical tools. Now, on balance volume is a tool that I help to promote. And while it is still a great tool, I find that the person's volume indicator, which is a measured move in volume, but not in absolute terms, but in terms of percent change. It's quite sophisticated, and it helps to illustrate a little bit more divergence patterns and volume trends than on-balance volume does. And due to the increase of an availability of software and technology, this makes it possible for us to use this type of an indicator. Looking at on-balance volume, it still kind of showed as well that divergence pattern. And so that's where we came up with the idea of the SMH, or at least wanting to be exposed to the short side of the cues up here. All right, let's look at one last thing. A week ago, we came up with a few items that we did not want to be at least exposed. This is Apple. Here's the relative strength. It's obviously weakened. Here's the volume. Relative to its new high, it had divergence in both relative strength and volume. Let's look at AMZN, Amazon. Amazon as well. The intermediate term and longer term analysis suggested that this thing was kind of running out of steam. But here's what I see going forward. Right now, as bad as things look for Amazon, you'll notice there's no sell signal. You'll also notice that the relative strength started to go down and the volume just started to eke a little lower. It's not as bearish as some of the other segments of the markets that I just shared with you. So we're going to have to see maybe a more pronounced downtrend before we get extremely bearish on Amazon going forward. And so what's interesting is that while the NASDAQ is down just in an enormous, in terms of 200 points down day on the Nasdaq futures, I'm thinking that we're probably a little overdone. Number one. Number two, let's take a look at the overall picture from a technical perspective. The Nasdaq has made, obviously we had a little sell signal here, and it's a matter of what has the advanced decline on the Nasdaq done, what has the volume done. We think, as I shared with you earlier, we have some maybe further weakness to go on the Qs. But does that mean it's just all Amazon, or does it mean it's partial Facebook, partial application software, your Adobes and things of that nature? On the other side of the coin, we take a look at the Russell, the IWM. And the funny thing here is that if we are to see any upside in the Russell, we're going to have to support right where we're at right now, and I'm not sure we posted on our weekly analysis. We need to see at least a 1 to 2 day kind of wait and see. This could be some follow-through weakness from the quarterly option expiration, but my take is that if we don't see any stronger or any further weakness in the advanced decline analysis, if there's not heavier volume on this, the Russell stands a chance of outperforming, just as we indicated from a seasonal perspective. So there's some things to think of here as far as trades are concerned. The VXX did a phenomenal job today in making money in this market. So again, if you're not short S&Ps, you're long the VIX. So that's it's one and the same kind of thing, right? So making money in the VIX was being short the market, or the VXX, that is. What I will be looking for more serious signs that we're coming to stability is if this thing generates a sell signal. And just because it got out, sometimes it gets out and the market does go up a little more. Just because it gets out of the low, sometimes it goes down a little bit more. So it doesn't mean that it's an absolute guarantee, but one thing is a higher probability. When this thing reverses and gives a sell signal, it's probably going to show stability and buying opportunity in the spiders. Until the next time, I hope you enjoyed today's video, and see into what our thoughts and observations were for this week. Thank you.